apparently I did not. There we go. Officially. Hello, everyone. Welcome to the Market Wrap. Those of you listening at home, disclaimers, as always, education, illustrative purposes only. We don't give recommendations to buy or sell. We're not brokers. We're not advisors. So we, of course, don't offer investment recommendations or trading advice. Sold Palantir, made some profit, Greg says. Love it. I love the sharing. And here's the deal. This is something that I noticed that our group does. When we share gains, we share in a productive way. Sold some for some profit. Closed for a profit. I did that, right? I sold half of the, not like no one's here trying to be like bragging. There's no unnecessary, but we also share losses. I gauge traders by their willingness to talk about loss. It's so easy to talk about wins because, of course, it's like, hey, I could go cherry pick a great win and be like, look how great this was. I always go back to that one quote that says, I never learned anything making money. We don't learn from those. What do we learn from? We learn from the grind. We learn from when we have to get in the jungle and battle, right? Okay, sorry. I had to let my dog in the office to hang out while we're working. He likes to come in too. No flexing, just learning. Amazing, right? That's exactly right. Moved up the Palantir, stop testing the continuing the trade concept. Okay, love it. Fabulous, Greg. Thank you for sharing that as well. Very cool. Let's have we had a great, we're having some really good sessions lately, so I'm excited for Friday. What are we going to do here? We're going to look at today's market, watching the sellers take over this thing. We're going to talk about our posture. What do we think is going to happen to our posture, which may then inform and help us understand what our mindset should be for trades that we may or may not carry over the weekend. Do I pair? Do I take profits? Do I take puts? What do I look to do? We'll talk a little bit about what we're looking for next week. We'll look at our opportunity list, and we will look at trading plan progress, which we are wrapping up section 3, finishing with your rules, and then we're going to move on to risk management. Let's get into it. Stephen D says, I had some stock in RILY. It was around $2 for many months. What? Oh, I don't know what just happened there. Okay. That's weird. Close out with a covered call. Lo and behold, it jumped. Oh, yeah. No, nothing you can do. Nothing you can do. You can see where I am right now. Now, if you notice, this was our last low. What did we talk about? We talk about bodies. The body here, I think I wanted to spend a couple of minutes here, if that's okay. So here's the body, here's the low. And if I extend this across and I extend this across, it's same, if not ever so slightly lower here. Let's look empirically, okay? So on this day, the body open was at 1545. The low 1490. Here, open was at 1538, which is indeed lower, and the low was 1479, which is indeed lower. Barely, but if we're technical, it's technical. So does this constitute a higher low hedge signal? No, not according to this assessment. This is a same low. Okay, so it's not an automatic hedge signal. Is this still a viable hedge signal? 100% yes, always. Always. So if any of you are like, yeah, I'm carrying some bullish trades, what's the accompanying thought process? Yeah, I'm, my fear here, even if it has somewhat stayed at these lows, is there still could be this thought where then, that the next place it ends up is back up in, well, I probably could have given it a little more space, something like that. If that comes, we would definitely want to have some puts in place, right? So now that's one thought process. The other thought process that Stephen D might be thinking about is, I don't have a lot of calls on. I'm thinking of buying puts to speculate. That's a very different thought process. It's not like you're easing something. You're actually actively taking a bearish stance in your trading. You're saying, I'm going to go to a negative delta on my portfolio. Right now, if you were to say, if you had, let's say you have 4 trades and they each have an average delta combined of 120. So you got about 480, about 500 delta. If you were to buy some puts, you're not trying to get minus 500 delta so that you have a 0 delta. You're trying to slow down your existing delta, right? So if I have 4 bullish trades and I add 1 bearish trade, I'm probably going to add about the equivalent of a 1-to-1. So I'm going to take my 500 and slow it down to 380 or whatever, 480 down to 360. And then if things start to go wrong and I stop out of a trade and then I stop out of another trade, I'm reducing my deltas, my bullish deltas, as I'm closing those, while what's happening to my bearish delta? If I buy puts and it goes in the right way, my delta expands. I start at 120 and then it gets to 150 and then it gets to 200. And all of a sudden there's a crisscross where now I have more negative delta than positive delta. That's where I'm trying to hedge to say, hey, if I can squeeze some gain out of these puts, it's going to offset the losses rather than me just sitting passively by and taking losses on my bullish trades. And if it ever turns into a 5% correction or even a 10%, a 5% consolidation or a 10% correction, we might get 1 or even 2 chances to put puts on. And actually, I've walked away unscathed before because of my puts, where it's just like, wow, I think we come away and the market's in a 10% correction and you're just sitting there at break even, ready to. That's what we're looking for. Or possibly even a little bit of speculation to the downside. So what would I be thinking here? So this will be interesting. And I'll tell you right now, the only alert possibility I think that we would have, again, is going to be this type of a put trade. Very similar to the one that we did. And what am I going to do? 5 weeks out. 5 weeks out. So I'm going to come down here to 35 days. Now I'm at the March 14th, and I'm going to go 5% out of the money from the recent high, which was we'll call it 610. 610 times 0.95, 5%. Oops. 580s. We'll go to the 580 strike. Excuse me. $580 strike price there. 383. 383. I feel like last time I actually went a little further out of the money. I'm going to jump to one more below. And look at that. Even going 5 extra points, which is not that much. That's only like 1 extra percent. So I'm like at 11% instead of 10. Excuse me, I'm at 6% instead of 5. 314. Last time the entry price. What was the entry price? 255. Right? Where were we? We were March 7. Now we're at March 14th. So 1 week later, we're 1 expiration later. So from March 7, now we're March 14. At the time, we were at the 570s. And the stock was around, oh no, you know what? 602. We're around 600. So I didn't go as far. Let me go let me go a little further. Maybe it's actually closer than I realized. It is. It is. If you see what I did there, the 570s are actually 258. Why are we doing that? Because there's no need to spend that much. We're not going to hold these for 35 days. We're looking to hold these for like 7 to maybe 14 days. What we're trying to do is we're trying to allow ourselves to get the cost of it. You can see for 10 of these, minus 160 delta. we'll only end up doing maybe, let's say, half of that, minus 80 delta for the entire trade. Right? That's what your hedge is right there. Let me know if anyone has any questions about that. We'll come back to this. Let's let that thought process percolate. Let's look at what happened today. So we opened bullishly and we rallied for about 20 minutes. Now, are we convinced in 20? No, we have an opening range philosophy that you can see it actually came down, and not only did it not pop here, but it actually broke the opening range to the downside. And then it fell further, and then it fell further. A little bit of a rally, fell further, and we're still falling. So right now, down 1%. Are we going to have a negative volume day? It doesn't look like it. This week, we got kind of a negative volume day, but I'm actually gonna just probably end up, let's drop down. Let me reduce the amount of time. Let me get this out of the way. Okay. These two aren't going to count. So what am I going to have? I'm going to have one. Now, I have one here, one here, but I'm kind of going to keep this. I don't know, Steven. Mine might actually get 1 degree better. Because if I have a 2 sellers to 1 buyers, or to 0 buyers, that's actually closer to a minus 0.25. Right? So if I am counting that as 1 between the two of these because of the funkiness of how this started higher, then here, ended lower, came up. At the end of the day, that's like 1 day's worth, right? I'm at minus 0.5. I'm at minus 0.5. Due to last week. But I said it would be easy for it to come back. So we'll see what happens. So yeah, if you're at a minus 0.25, you probably won't change yours. I don't think, and here's the deal. Today's a deciding factor. Right now, average volume for today, 47 million. We're at 37 million. We have 43 minutes left to get basically 10 million shares. No, 10 million's average. We need 10 million plus another 2.5. We need 12.5 million. I don't think so. If we end up getting above average volume today, then we'll have a new negative volume day, and I would then definitely score that still at a minus 0.5. If it doesn't end up, I think I might end up ticking up a little bit. But here's the thing. We can see what's going on. This is hard to ignore that this is kind of showing this pattern right here where it's like, okay, now the scary thing of something like this is we don't just expect it to just be like, oh, now it's going to do this. And that's not an expectation, right? What would the expectation be? That on this next one, it might do something like this and come all the way back. And if that happens, let's remind ourselves where the correction is. From 610.78, the correction is at we'll call it 550. So if we got that move there, the next concern is that we hit the underside and then 550, and that becomes a correction of 10%. Right? Do I think, oh man, we have a good economy and we have the spring and there's a lot of things? Yeah. Do we also have some turmoil? some political turmoil that is absolutely adversely impacting the markets? Yes. Absolutely, right? We have Trump, and this is the impact, right? I think that it's there's no way around that is absolutely an impact on the market right now. So we're thinking about the possibilities. Am I predicting that we're going to drop 10%? Absolutely not. Absolutely not. What I am saying is, at the end of today, we'll know whether or not our volume score is going to decrease, and go from there. Okay. Yeah, there's some concern. I would not expect the correction, if we have one, till early March. Early March is where we would end up if it was a correction, which would have to be starting now, right? So let me expand my chart just a little bit. Let me go back to 20 here. So, and I'm not predicting anything one way or the other. What I'm saying right now is our buyers are failing to materialize for the second time. They tried there, and it's like, oh, okay. Now they're trying again. Oh, and again they can't get through. This is becoming a heavy resistance with even a little bit of a lean on it. So March is here. This is the first week of March. So if this thing were to have like a heavier drop down to this 575, and then it failed to come up, there's your correction, and you're in that first week of March territory, right? I think we should absolutely have that type of possibility in our minds right now, which would what? Which would support a hedge, and possibly even, if you thought this was any possibility at all, you have to say, do I want to participate? If no, then nothing. You do nothing. You watch. You protect against the impact that this would have if you had bullish trades on, by hedging, by tightening stops, things like that. If your answer is I think I'd like to see if I could make a little money on this type of a thing, right? So if you look, the pattern that we're talking about is very similar. Let me go to blue. To this kind of a thing here, where it started to stay, and then it fell, and then when it couldn't get there, it fell worse. That didn't end up being a correction. It was able to stabilize, but we're running that same pattern for the second time. So what does that tell us about the buyers? It tells us that we have some concerns, right, about what they're thinking. So let's scale this back to, if I'm new, what should I be doing right now? Well, right now, when you look at the fact that the market is showing us this big bearish engulfing pattern at this level of resistance, or even slightly lower level for the third time in a row, top, triple top, potentially. This is not a triple top until we break the support level. But if it breaks that level, all of a sudden, this becomes a possibility. And if it does this and it can't seem to recover, right, then what? Then we start really thinking, oh, that could be where the correction comes into play. So avoid it. If nothing else. Right now, you're not thinking, hey, let's go get some bullish trades and put them on. You're thinking, whoa, yeah, let's see how this plays out. So easy, right? Our posture has pulled back. We're off the highs of our posture. We know that there's some things working themselves out. There's no need for us to commit to a market that's slightly uncommitted. Relax, let it play out. Should you speculate to the downside or hedge? Well, if you have bullish trades on, you should definitely consider a hedge. I'm a big proponent of hedging. I'd rather do that than just like, hey, let's just ride these bulls into next week. And if it gets beat up, well, we'll just we'll lick our wounds and see what happens. I'd rather try to take a proactive stance. I always tell people if I'm driving down the road, I put my seatbelt on, right? I wear my seatbelt. But if I'm driving down the road and I'm heading straight for a big tree, I don't think to myself, it's okay, I've got my seatbelt on. I think to myself, you know what? I'm going to try to hit the brakes. I'm going to pump them. I'm going to hit them. If that doesn't work, maybe I'm going to jerk the wheel a little bit. I'm going to try to avoid it. And if worst case scenario is I can't do any of those things, I've got my seatbelt on. But I never think seatbelt first, right? I'm always thinking, so it's the same thing, right? When we put stop losses on, we don't just think, oh, well, let's see what happens. We think, oh, let's manage it. Let's work it. And as I'm working 3 bullish trades and in each one of them, I'm working to manage the stop, things like that. I'm also thinking, hey, I can protect all 3 of them at once with a put. I can get a little bit of comfort that as things start dropping, I'm not just like, oh my gosh, because I know I don't even have to go look at it to see how it's doing. I know I can just focus on the bulls and managing my way out because I have a trade that's doing well and increasingly well as the market sells off, right? That's the thought process. So sometimes the hedging is not always mathematical. It's also going to have a psychological component to it. Okay, so there it is. That's the thought. So what would we be thinking here? We'd be thinking the possibility of 575 with, I would say, the low here would be 590 followed by 575. So let's just throw those in and see what they look like. So let's go 590 here. Let's go 575 here. And I'm just going to go maybe like 608 on top. Dun dun dun. Dun 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 dun. Oh yeah, this has some. Nope, that's wrong. I got to get, there's today. Let's get to next week into the Wednesday area. 12th. 600. Okay, so look at that. I'm only getting 1-to-1 on that first piece. I'm okay with that. 1-to-1, a little better. Because it'll be better. It'll be more than that. It'll be more than that. What do I mean? Well, remember that, and this only counts. So don't look at this one here anymore. We're not going to look at this. We're only going to look at this number here. And I'm going to play with the volatility. I'm also going to let my dog out. Now he wants out. Okay, there we go. I'm going to adjust volatility. How much volatility would we get? Well, let's go take a quick peek. Last time, it went from 15 to 18. We'll give it 3 points for that little drop. Just 3 points. Okay, so keep an eye on that 720, right? $750. 3 points. That's 1. That's 2. 3. 3 percentage points of implied volatility. Why is that happening? Vega. Remember that Vega helps us understand how sensitive our options are to an increase in implied volatility. Yes? So the Vega. So it's not like I'm like, oh, I'm only going to make 100 or 700. I'll be like, yeah, I think we could do much better than that. Much, you can see there. If it ultimately drops down to that 575 level, and 575 is not, that's barely like, that's not the correction at all. So Yeah, I would say that there's some teeth to this thought process of this type of a trade. Give me your thoughts. Now, here's the deal. I am not gonna put the alert out because it's not really. I mean, yeah. Well, actually, I don't know. Maybe I would. What do you guys think? Should we put it out or leave it? I feel like I don't want to get in the habit of putting out bearish trades right now. But you tell me. Do you feel like it's helpful to have something like that? I'm gonna let the group decide and prevail. John says, I am in a bearish mood after today. All right, let's do it. Oh my goodness, is that Bob Walker? Amazing. Good to see you. I'm just gonna take this from last time. I'm gonna repurpose this so I don't have to start from scratch. Give me just 1 second here. SPY. I'm gonna actually say bear this time. Because it's more of a SPY bear. It's more of a, discretionary hedge / speculative. 2.7. A week later, we're thinking about it again. And I'm going to say hedge / speculation. Current price. We're going to say between $600.50 and $601.50. Clint says, I think it's good for learning. A hedge like insurance you pay for. Yes. I love it. Stop range. Let me see. I'm going to go just above this high. 608.13. I'm going to say 608.50. 608.50 to 609.50 is the thought process. Primary target this time is 575 and 590. I'm going to still go with 5 to 7 days, looking for this to go pretty fast. And I'm going to say, max risk. Stock max, let's see, 575, 25. We'll leave it around we'll call it a 3.3 to 1-ish, something like that. Volatility index is low enough. It's still in the teens. Long options to hedge spec. Okay, so what are we doing? Long puts. We're now going to March 14. Still looking at the 570 strike prices. Let me go look at a live price on these. Yeah, so what is the thought here? You are either hedging or potentially speculating. Uh, 570 strikes. I feel like $333. So they're definitely. Does that sound right? Nope. I went too far. March 14. I was like, that seems too much. Are we only putting on Sandy? That's the. I'm showing 252 right now. Sandy, that's the thing. That's the personal decision of are you feeling more bearish or more neutral? If you're feeling more neutral, then no, you're not going to hedge if you don't have bullish trades. You're going to sit. If you're feeling more bearish than neutral, yes, press. It's either a hedge or a bearish speculation. So if you have bullish trades on it, it's a hedge. If you're more bearishly oriented, it's a bearish speculation. If you're neutrally oriented, meaning you don't have bullish trades on and you're not seeing it as bearish, then you should do nothing. Nothing. Hopefully that makes sense, but let's just go look at risk. I'm like, that's there's no way that's my risk. Of course it's not. There it is. That's a little better. That looks like 150 plus another 40, 190. 190 for some hedge. Yeah, that's a bigger chunk, it feels like, but it still has a good reward to risk. Well, let's just see. Okay. What else is going on? Yeah, so talk about what did you do with some of the other trades? I am going to put this out. Which means I know you guys, I'm working on getting this to be faster, but bear with me. Let's get a little conversation amongst ourselves here for a minute. Okay. I definitely wish there was a better way for me to put these out. But it's all right. We're gonna figure this out together. Spy alert 27. Yeah, if you want to talk about what you did with your flex trade amongst each other, if you took that trade, that would probably be useful. Let me go ahead and put this first in the group. Trade alerts. Of course, everything starts to slow down. Okay. Trade alert. SPY 2725. Publish. Okay, that's one down. Let's get an email out there real fast. Okay, let me check in with the group here. Taking the same analysis that we would take on stocks moving up, would today's gap down miss it? Well, it didn't really gap down, right? We're engulfing. So it started here and now is where it's convinced us. To be honest with you, I wouldn't be convinced anywhere above, 602 and change. I mean, it really is only, let's see, what's the low here? The low here, yeah. So, I mean, honestly, I'm not trying to convince anyone. I'm saying that this looks exactly like this, and that's where we took the last one, right? It's a very similar prospect. However, like I said, You know, if you look at it and you're thinking to yourself, man, I'm hesitating on this. Great. Uh, yeah, it's we want to make sure that it's in your wheelhouse. Put volume is 400. Well, again, I'm not going to look to the market volume as a confirmation for me as to be like, yes, this trade makes sense. This is there is never a time with any option ever on SPY that I'm concerned about volume or liquidity. Go look at your bid-ask spread and you'll be like, yeah, this is going to be just fine, right? That's the advantage of trading SPY. Bear speculation or hedge. Save and close. Save and exit. So yeah, I appreciate you pointing that out because we should always have a volume / open interest discussion, but it's SPY. That's the most liquid stock for options in the world. So, trade alert. What was your fill price? Is that, if you're doing it, tell me your fill. I'm just going to throw this here. 299. That seems higher than the current price. Did you do a different strike price or a different expiration? Did you go out to Did you go out to the March 21s? I think you're looking at a different strike. Yeah, you might be looking at the 575s. I think you're on a different strike than the rest of us. $270. Took the 570s. Okay, let me get this email. Okay. Anybody else? I know there's some people taking it, seeing what the weekend is going to bring. Last time it brought us a little bit of turmoil. We'll see what we get this time. But yeah, this is let's get to the rest of the watch list. I've just got to get this last core piece. Okay. No trades on and optimistic. Okay. Okay, fair enough. Fair enough. Yeah, there's got to be a better way to get this sent out so it doesn't take me so long. All right, they're out. The alerts are out. We're good to go. Let's get to the rest of this watch list and what's going on next week. Why go so far out when we're worried about the weekend? Because I do want to have the ability to ride a full 10% correction, potentially. I mean, if you're doing 5-6 contracts or more, you might have one or two that you carry. And if you're going to get that, you're going to want to have you're going to want to have time for it. So, I don't ever want to buy as much time as I need. I typically want at least 10 to 14 days more than I need, and I might need 3 weeks. So that's why I go to 5 weeks. That's just the formula that I go with whenever I'm using SPY in a hedge / bearish thought process, Greg. Now, as you adopt this, you might be like, you know what? I like what Scott's doing, but every time I do this, I'm out before that. So I'm going to go to 3 weeks on mine to bring the cost down. Okay, I mean, look, that's when you're really, really learning. You're really diving into how you're making this strategy yours. I love that you asked the question. I hope that's a reasonable answer. Yes. Okay. Questions and about anything else, let me know. Really enjoy the process. Yeah, right? Okay, let's hit the watch list. Oh, man, I got rain and wind blowing into my house. I don't know what's going on. It was nice for a minute. Apple. Oh, Apple. We were thinking hey, maybe Apple's trying to do something. Oh, and it just ripped it back down. Amazon, I'm actually fine with. I told you I would be fine with Amazon. I think Amazon's potentially setting up. This is something that could lead us. Look at this beautiful trend. I think Amazon looks great. AppLovin, nothing there. Earnings coming up. Got to be careful with that. AXP. Okay. Did you reach the end of the line? If you did, I understand. Right? I completely understand. If that's the case, you can see at this point, it's, right? It's kind of gotten to a point where it's now maybe rolling over. Let's go look at this Heiken Ashi. Still holding. Okay. And you can kind of see it hasn't gone into a red candle yet. So I think you could make an argument either way. This one's going to be right in a discretionary way. Sandy says, do we always use only the SPY for a hedge? That is my go-to, yes. If, for example, you were highly weighted in technology, you could use the QQQ as a hedge. There's no way you're going to be highly weighted in small caps because, well, I guess if you owned a lot of small caps, you could use IWM for a hedge. If you were weighted overly in large caps, you could use DIA for a hedge. But the most balanced and then, once again, characteristic that really makes it most appealing is its liquidity. It is absolutely, unequivocally more liquid than the QQQ, more liquid than the DIA, more liquid than the IWM, right? Et cetera, et cetera, et cetera. Thoughts? Okay. Yeah, AXP. That one could be, couldn't be. I think we'll see how that one plays. Oops, I don't want bars. Let's go back to candles. Bank of America, pausing. BX, rolling over. Caterpillar. Right? Caterpillar never did enough. CLS, flagging. Yeah, put CLS with Amazon. This is a core. Look how strong this is. This is a leader. I've got a great range where this thing can pull back and possibly give me a trade. But it could be a day, it could be 4 or 5 days. Cisco. Just barely starting to hit some resistance. Fell a little short. Earnings in a couple of days next week. Be careful there. DAL. Sputtering. The Dow pulling back. Fastenal. Ooh, that was another one that was like maybe, and then it just nothing's really holding up. Here's Flex. We looked at it already, but what's it doing? It got very close to its target here. Now it's engulfed. This one, what could you do? Well, I mean, even now you'd be having some profit. Even now you would have some profit. Do you take some, keep some? Do you take it all? Have you already taken some? Let us know what you're doing there. As we said, it was ahead of schedule. This is still in line with this schedule. So there's no panic here. It's not to calf off, love it. It's not like, whoop, hold on. It's not like today is a huge surge of sellers by any stretch. It's a big candle, but it's not a big amount of volume. This is not going to get to average. Now we're down to the last 9 minutes. Average is 4 million. We're at 2.5. So there you go. Let's go to Bitcoin. Still pulling back, but maybe setting up still. GE Vernova. True, maybe. But this is the only one. Gold, strong but overextended. Google. Google's looking kind of weak right now. Nothing there for us. Goldman Sachs looks good but overextended. Good but overextended. What's the pattern? IBM, add it to the list of the early leaders, right? The early leaders with Amazon. The other one that I'm forgetting now. So bad. CLS, I believe. Yes. IBM looks good. International Paper. I told you that this has to be like the full reversal pattern. Okay, stage 1 is complete. This is enough for me, but it's got to pull back and then do something like that. We'll see. Small caps. Down. KKR. Nothing yet. MasterCard. No. Meta. Look at Meta. So strong. But we need a pullback. Microsoft. No, Morgan Stanley. Microsoft's coming up. Nothing yet. Microsoft, no good. Way down at the bottom. Here's Netflix. Woo, I'll tell you, right? We definitely look like we're looking for something. Okay, NVIDIA. Sneaky reversal, maybe? I would be willing to consider something along those lines next week. We need something to lead it. Palantir. Overextended. Here's the Qs pulling back. Here's Roblox. Trying to figure it out after earnings. Real bad, but got a lot back. How about something like this? Bouncing off the 50 right through here. I would say, yeah, I'd do something like that. I would. Reddit? No. Overextended, close to earnings. Rocket Lab? Is it going to give us a trade? Are the buyers going to try to come in? We don't know yet. SoFi Technologies. Same kind of a thing, maybe, I guess. Here's the SPY. Okay, so we said we don't think it's going to get the volume. It doesn't look like it's going to get there. Average at best. Here's TJX. Toast, Tesla. Yeah, Tesla's now convincingly broke the 50. Oh, we'll see what happens. TSM. I like TSM too for a potential sneaky reversal where you're like all of a sudden it's at a higher low. You're like, maybe? You're like, yeah, maybe we should. I think next week we're looking at consolidation action early, and then we'll see what happens from there. There's Twilio. Twilio, I think, looks good. Only problem is you have earnings coming up. Let's see where the VIX is going to finish. Definitely at a escalating perspective right now, in my opinion. Walmart. There's the rollover. I'm assuming if you haven't taken it, now you have. You'd still be a buck ahead of the target. I love Walmart. I'm looking for another opportunity on Walmart. So we still have things to trade, but yeah, right? We're not like, oh, let's put it this way. What's the potential to overtrade this market? Still pretty high, right? If you're aggressively doing anything, if you're actively, like if you're moving a lot, I would say, yeah, you really should stop and think, did I just, jump off the freeway because it's traffic and I'm just racing through neighborhoods, but I'm not actually gaining any time. I feel like I'm doing something, but I'm really not. Relax. This is not a market that's going anywhere without us. So let's just kind of be deliberate, methodical in what we're trying to do. Along those lines, boom, trading plan. This is our last couple of days working on section 3. Next week, we're halfway through. Bam, you blink and you're halfway through. First 4 sections of the plan. That's the hardest part. The back half of the plan, we have 2 full sections where we're not even working on the Word doc, but we're working on a spreadsheet instead, working on the record keeping. So right now we're finishing with your trading rules, your systems, entries, stops, targets, time frames, position sizing, management, scaling, managing, all of that, exiting. What are the rules? As definitive as possible. Next week on next week on Sunday, we're going to shift to section 4, which is risk management. Portfolio heat, trade risk, number of trades, correlation to market posture, more talk of hedging, etc. Okay. It's good to see everybody. I just started getting like nasty, windy, rainy weather. Not stoked about that. I hope the weather's nice where you are. I hope you have a great weekend. I will see you guys on Sunday. Sunday is regular time, 11 a.m. We'll do our thing. Hey, whatever this market is, we will be water and do what we need to do. Enjoy your weekend. I'll see you soon. As always, happy trading.
Recording stopped.